Hello, and welcome back to the show. You know it already. We dollar cost average $1,000 a day, every day into the crypto markets. And today I am dollar cost averaging $2,000 a day moving forward because I think we're a little late to the game and I really want to start getting my DCAs in pretty heavy before we get into the 50s. I think we're going into the 50s. So I got 1,000 into Bitcoin. And we have another 1,000 into Ethereum, but it's not reflecting in either account. But it'll show up shortly, probably tomorrow. I don't know why it says 2 days ago. I think I did one of these super late in the evening, so it's showing up as 2 days ago. But I did two yesterday, I suppose, according to this. Anywho, we're doing well. We're up about $1,000. That's great news. And Shrimpy is saying we're up about $500 since yesterday, so that's good news as well. Yeah. So how do I feel about this chart? I don't know. We have some ways to go. I'm not too excited about the amount of volume on this going up. This is not great news, actually, when it's that low volume. I don't know. We don't have that push and that strength that we need to really rocket through this, right? It makes me a little nervous because we are approaching these lines of resistance, which is coming up quite a bit. And let's see if we're able to push through, or we're going to make a little curl and come down to 35 maybe and then come back up. I'm not sure. We'll see, though. I already covered this in the morning stream, but KPMG is buying Bitcoin. That's a big deal because KPMG is an accounting firm that's pretty conservative, right? They're not like the big dogs that are just going to go wild. So very, very interesting that they see some value in Bitcoin and Ethereum. Normally it's just Bitcoin, but Bitcoin and Ethereum, very interesting. They don't disclose how much they bought, but cool. This is very interesting. So we're going to get January inflation figures on the 10th, which is a couple days from now. I think it's Thursday. I'm very excited for this. So if if the inflation numbers are up, this means that Powell is going to raise rates maybe more frequently, like 5 or 6 times this year in March, right? That's okay. The markets are going to react. If inflation rates are below what we expect, which I think we're at 6.5 right now, 6.7, I think, we're probably going to see a bit of a rally in the public markets. But and so that's relatively straightforward, right? Specifically for the Nasdaq. If interest rates are up, we're going to see Nasdaq come down. If interest rates are down, inflation rates are down, we're going to see Nasdaq go up. Makes sense because the cost to borrow should be less, and they'd expect investors like us expect Fed Chair Powell to not raise rates if inflation rates are down, or be maybe more dovish, similar to what he did last time, a couple weeks ago. But what happens to Bitcoin? And this is the big question, and we're gonna understand the investor mindset on Thursday when this data comes up, because if inflation rates are up, we're going to see Nasdaq come down. So does that mean Bitcoin goes up or down? Because inflation is used for two things. Bitcoin is used for two things. One, as a store of value, because you don't want to keep your money in the bank or whatnot, and you want to avoid. The second thing is inflation. You want to avoid inflation. So if the inflation rate is up, Nasdaq goes down because taking a loan is more expensive for tech companies. Tech companies sell off. But Nasdaq is correlated to Bitcoin. So does Bitcoin go down, or does Bitcoin go up when people put more money into Bitcoin as a run from inflation? My bet is that it goes up as a run from inflation. Now let's do the opposite. What if inflation rates are lower than we expect? Nasdaq goes up, right? Because the tech companies inside the Nasdaq are like, oh, great, now we can take loans out for a longer period of time, and we think now that the Fed Chair Powell he'll be dovish, right? So we'll be able to continue taking out our big loans and not pay huge fees and whatnot, and our bottom line will stay healthy, and during earnings we'll be fine. So if that's the case, then does that mean Bitcoin goes up or down? Because then there's less inflation. I don't know. That I don't know. I don't have the answer, because maybe people buy into more Bitcoin because everything's going up. I don't know, because we kind of brushed against this, but this is analysis. Like, we're looking at Bitcoin, but this is an analysis of human behavior. That's what this is, right? It's not. There's some bots here, of course, but mostly an analysis of human behavior, which is why we may see these parallel lines so crisply, because we're seeing behavior kind of play out, right? Like tendencies almost. And this tendency not to cross this line, and so on and so forth. So I wonder what's going to happen. I'm really interested in understanding the market a little bit more on Thursday, and I'm excited to share my thoughts on Thursday when this happens. One more thing I want to bring up is when inflation's over 5%, I saw this on the Meet Kevin show. You've probably seen it on YouTube. We see a recession happen. Now, I can't pull the exact same chart he has for whatever reason. I'm not sure why. It's not coming up. But when it's over 5%, we see a recession almost every time except once. And this is nerve-wracking, but it makes sense, right? Because Fed Chair Powell, our guy here, sees on Thursday inflation is higher than we expected. Let's use a scenario. Sees it's higher than, and I feel like I'm beating a dead horse, but let's just go over this one more time. He sees inflation is higher and CPI comes out higher. So instead of it's about 6.5, let's say it's 7.5 or 7% or whatever it is. And he says, hey, listen, this is higher than we expect. So we're going to have to raise interest rates. And so he raises interest rates in March, and maybe he does it a couple more times than he usually would. Now, this causes, of course, tech companies to be able to buy less things and then, take big loans up because it gets more expensive. And if they do, then you get a sell off in the market. And this is a trickle down effect. Then smaller companies can't take loans to, expand their business, less employees, more people are unemployed, general output less in the entire market. What's that lead to? A recession, right? And when you have a recession, your basically output is decreasing. That's essentially what's happening. So we see a couple of dark months in the markets. The question is that what we're going to see? Right? Is that what he's going to do? This is what the correlation is so far, right? We've seen it since the 50s almost every time. I think there's one instance where it doesn't. I don't have the correct chart, but this is roughly accurate. Like this number is like 1 point lower than what it is. It's actually 8.9 or 9.01 or something, so it's a little lower than what it is, but you have the general idea. Anytime it spikes, basically, there's a recession after, right? And the spike is inflation, and the recession is the gray area. So it's interesting. And we have a spike here, so are we due for a recession? That being said, after something like I don't want to say the plague, but after something like this, what we've just been through, which is a pandemic, you normally see a lot of economic, a re-emergence of economic prowess almost. Like you can imagine all the restaurants that are closed right now, they're just going to come back to life, and everyone's kind of a little bit more free from the masks and everything and these restrictions, and people are out vacationing more, people are buying things and all this stuff. But has all the buying been done? We've talked about this a lot via Amazon, all these things, and we have the supply shortage, or not the supply, we have the supply chain shortage or problems. And so how does this impact everything? It's always obviously complicated, and history rhymes, but it doesn't exactly, it's not exactly the same every time. So we're gonna have to wait and see. But I wouldn't be absolutely shocked if we saw a recession, and by recession, two consecutive quarters where we have less than 3% gain, I believe, but don't quote me on that. What is the definition of an inflation? What is the definition of a recession? And I'm mixing my word. The period of temporary economic decline during which trades and industry activity are reduced, generally identified by a fall of GDP in 2 successive quarters. Okay, great. That makes sense. Right. So let's stay vigilant here and see what happens. I'm excited to catch up on Thursday, but I will be posting another video tomorrow to update you on more things. See you then.